but it's like that's harsher. Like you're stoning somebody. I know you said you're not, but it's just
I
even
mean,
even to think about stoning Jane Wu seems a little aggressive.
I'm having a rough morning over here. All right.
I wonder how DeepSeek would respond to you mentioning the stoning of a.
This podcast contains the arguably witty banter of two friends, Skippy and Doogles, that like to debate about investing. The content is intended to be entertaining and for informational purposes only, not investment advice. You should do your own research and consult a financial professional before using any of the information in this podcast, and especially before investing.
We've gone international again because the people need it. The people need the internationalities.
I mean, whatever. You need it. You're sitting over there in Aruba.
Yeah,
Don't talk like the people told you to go.
I'm a person, so and if one person needs it, maybe multiple people also need it.
I mean, how's the beach? I see some palm trees in the background.
Yeah, it's pretty awesome. The water is ridiculously blue in the sea, the Caribbean or the Caribbean, depending on your pronunciation. The temperature fluctuates between 79 and 82 degrees.
Oh, that's tough. Yeah.
Oh, I
Really
know.
tough.
I know. When it gets 79, I got to get my parka. Got to put my parka on. It's rough.
82 is it's speedo weather though. So you're just switching parka to speedo.
Oh yeah, that's right. Don't make
Degrees.
me stand up right now. You can see it. Parka to Speedo
Uh,
would be a good memoir title. I got to remember that one.
yeah. I
That's
like it.
right. You know what we haven't said in a long time? Rate and review the podcast.
Yeah, that'd be
Please.
great.
That's super helpful. If you have not rated nor have you reviewed, go do that dagnab thing. It's very, very helpful for us. Please rate and review the podcast. SkippyDoogles.com. You can find all your Skippy Doogles needs and send us listener mail, skippydoogles@gmail.com. We gonna start off something that we honored. I'm gonna say, maybe you, I didn't so much. You honored El Salvador and Bukele naming Bitcoin as the currency of the nation, the official currency of the nation. Remember, you were like, "Yeah, Bukele, I believe in it. I believe in it." Remember that?
No, not. I think you're
You
making
don't.
stuff up.
You don't remember any of that? Okay. Well, we'll go back.
No.
We'll go back and play the episode. Everyone can go look at the episode. But what was it? 3 years ago, I think, is when this happened.
Yeah.
About 3 years ago, maybe a little over 3 years ago, Bukele, who is the president of El Salvador, said, "We're going to build Bitcoin City, named Bitcoin as the official currency, and he's going to use the volcanoes to do all the mining." It was very exciting
Mhm.
times. It turns out 92%, I believe, was the number of El Salvadorians never used Bitcoin.
Nice try though, guys. What you're alluding to here is it was the official currency of the country. I put that in quotes, and it
Oh,
was
yeah.
legal tender. They were mandating that all businesses must accept Bitcoin.
Have
Correct?
to. Have to. Yes. But no longer. Now they called it off. He's like, didn't work. Did not
Wait.
work.
So if 92% of your population doesn't do something, having it mandated that they have to do it might be a bad idea. Is that what
Is
you're saying here,
probably a
Douglas?
terrible idea. Yeah. And unsurprisingly, the quotes from the populace were things like, "It feels pretty risky to be using Bitcoin." So yeah, not surprising. He's still behind it. Bukele is still saying this should be. But it seems like I didn't get all the detail here, but something happened where the IMF, the International Monetary Fund, demanded that El Salvador do something, pay them money, get a credit line. It was like something along those lines, and they couldn't do this with Bitcoin, and so it fell
You
apart.
mean that's what happens when you're leading the world, Douglas. When you're so far ahead of the game, you have to wait for the
That's
IMF
right.
to get caught up with you.
Yeah, that's right. But one day, and that day may never come, Bitcoin may be back. So
So I'm a little like I read the article. I'm a little confused on what it all means. I mean, they still hold a significant amount of Bitcoin on like the government balance sheet,
yeah,
but it's no longer legal tender. So they're just going to live in this in between land going forward.
I it's a very odd in between land because even on the legal tender piece, it seems like they're trying to claim that it is legal tender, but it's not legal tender. So it and Bukele doesn't seem like he's acknowledged the fact that it's no longer the official currency, but the country has. I don't know what that means when the country is saying this is no longer official currency, but your president isn't. This seems like something that could happen here, to be honest. But that's what seems to be going down. So it's a weird gray area. But the people are like, we're not using it, so it doesn't really matter.
Here's a quote that might illustrate that point. The reform eliminated the word currency when referring to Bitcoin, but says legal tender. Despite its lack of clarity, it lifts as is required by the IMF. the obligation to accept it in transactions or debt payments, a key condition for legal tender, according to economic analysts. So
Yeah. How confusing is that one sentence?
playing some games to get the $1.4 billion credit they needed from the IMF is basically what's going on here, right?
That is exactly right. So there you go. Updates for the people. I'm going to stick on international for a second, reach into this fishbowl to hit on this recent Alpha Architect piece. Is it time to ditch international stocks? That is the question. The reason it asked that question is because it's saying for a while here, people have been like, and people, I mean Skippy, has been like, we got to go international. US is expensive. US is expensive. And they're saying, but we've been saying that for 10 years. And over the past 10-ish years, the US has greatly outperformed international. And so is it time to give up on the argument? Now, it's a little bit tongue in cheek here because the answer they're making isn't yes. They actually say, and I like this. This is where when it lands at the end. What they actually say is this. They go, if you believe that the answer is yes. Okay, so let's just imagine that. What that means is that you believe that the S&P 500 has indefinite multiple expansion in its future, has indefinite higher earnings growth in its future, and that dollar appreciation is also indefinite. So yeah, go for that. Like if you believe in those things, then go for it. You have to have limitless optimism, no ceiling to your optimism, and more power to you. Or you can say that because of the nearly 40% appreciation of the dollar relative to global basket of currencies, the ridiculous PE multiple that exists right now, you can be like, maybe we should own more of the world. And that doesn't mean you have to go 100% international and drop the US stocks, but like maybe it's time for diversification. I think it's an interesting way that they framed this piece. So
yeah, they're the one shop that even if I don't read the article, I can almost guarantee that I'll agree with their takes and their logic behind it.
Yeah.
Right.
Yeah.
They break this down into 3 factors and say over the past 10 years, all 3 of those things have tilted in a way that help US stocks outperform international stocks.
Yep.
All that has to change, like any of those things change. And the outperformance is significantly less or maybe not at all. Yeah, this is Talk My Book. Oh, there's still some deals out there, man. You were talking about Brazil last week. It's really fun. And there's more uncertainty in the U.S. financial, I don't even know what to call it. Let's just say system than there has been in a long time. The current administration is shaking a lot of things up. Some good, some bad. Who knows? But it's harder to have the investment philosophy that the U.S. is going to be predictable above all else. It's not that at the current moment. So to me, that's another reason to consider international.
It feels like a pretty good time. And I would say, at the very least, from a mindset perspective, it feels like a good time to start thinking about dabbling. Like it just because to your point, if any of those things shift, like if there's any reversion to the mean when it comes to the 40% appreciation of the dollar relative to international stocks, or the current CAPE versus international stocks, which is something like 1.5 times or something like that, or the outperformance, right? S&P 500 is up something like 7x over the last 15-ish years. International is up double. So you're talking like a 3x-ish.
Yep.
I mean, so it doesn't mean it's going to happen tomorrow. It doesn't mean it's going to happen in a month. Doesn't mean it's going to happen this year. But it's like time. That's when I say mindset-wise, to start dabbling, thinking about, just expand your horizons.
Yeah, because we've had a decade of the perfect storm.
Exactly.
And for that to continue seems nearly impossible.
Yeah. Yep. There you go. All right, what you got in the bowl?
You sent me this article on China, and it was really good. It was about a lady who went to London to get a master's degree, and unfortunately, my computer won't load the article. So she goes back to China and is having a really tough time getting a job. Unemployment rates for people in their early 20s is between 16 and 24%, just off the charts high.
Yeah.
And China has among the highest rates in the world of wealth tied up in real estate, and their real estate is just in shambles and has been for years. About 70% of wealth in China is related to real estate. So if the value of real estate drops, it's more impactful to real wealth for the average citizen in that country in China than it is almost anywhere else in the world. This all ends with her saying, maybe I can take my family to the United States. Maybe we can go to Canada. I just don't see any prospects here, despite being Western educated, highly motivated, hardworking. It's kind of a sad read, right? Because it doesn't feel like anything she did is the reason for this, but it outlines some of the headwinds that are there. And Doogles, that's before I even mentioned the demographic challenges, right?
Oh,
it's
huge.
Japan, right? In terms of the aging population, the amount of people that will need government support because they won't be able to work, and there's just not many young people to support that.
Here's a quote to put everything that you just said into just one sentence. This is from Jane Wu in the article. Even if I married a man with a good job and a good family, I don't see us ever having the financial resources to raise a child in Beijing.
Yep.
That is some consumer pessimism. I mean, the sentiments.
Oh, is it ever?
Like, what's important about that from a sentiment perspective is even if that what she just said is not true. Like, let's just say that if she married a man with a good job and a good family, they could easily raise a child and it would be super comfortable and they could have access to anything that they wanted, right? Let's just say that that's the truth. The fact that she does not see that when consumers aren't optimistic about the future, it becomes a self-fulfilling prophecy potentially, because you're not as willing to invest in yourself. You're not as like, you don't want to go spend money on anything material because you don't believe in the future. And so that's why sentiment can be really important, independent of whether or not that's the case.
Sentiment is really important. I mean, she's worldly. She's already lived in Europe, and she doesn't feel like she has a fair opportunity in her home country, which is why she's considering places like the US and China. This Canada matters a ton with inflation, right? It's what people think prices.
That's right. That's exactly right.
Will happen to prices rather than what actually thinks sometimes. So yeah, I think that was the most stark realization that came, is it just felt like she had given up. And this is not your, I mean, I'm not trying to throw stones or anything, but this is not your C student of average intelligence. This is one of your most hardworking, worldly people that should be employable, you'd think, if anyone was employable.
That's right.
Seems like she would be.
What's this throne stowing or stone throwing you're talking about here? Is that like throwing shade?
Yeah, that's right.
Okay. But it's like, that's harsher. Like, you're stoning somebody? I know you said you're not, but it's just even to think about stoning Jane Wu seems a little aggressive.
I'm having a rough morning over here. All right.
I wonder how DeepSeek would respond to you mentioning the stoning of one of its people. I don't know.
Not so well. Yeah, not so well at all.
Okay. I'm gonna reach in the fishbowl. I have
wait. Oh, before you switch, this week, this is related. It's your DeepSeek comment. This week I just sat back in my chair and I laughed really hard. Me, a value investor, a deep value stock, now owns significant parts of two companies that own two of the best artificial intelligence models in the world. And where this comes from, Doogles.
Meta's one of them.
Yeah, Alibaba bought 10% of DeepSeek this week. Is this not the world's funniest thing?
You're an AI investor. I've known it the whole time.
Despite trying to avoid it like the plague. Like, literally not wanting any part of it. Yeah, it's rather humorous to me.
It came to you. You didn't go to AI.
So DeepSeek, my baby. Yep. I'm such a fan now that Alibaba owns them. Let me tell you.
I hope they fix their database situations. That's what I hope happens.
There's a hack. If you guys use Perplexity, you can use the DeepSeek model, and everything stays in the US, which is pretty cool.
Yeah, I will believe that one when I see it. Okay. There are two different podcasts that I want to talk about. They're both interviews with investors. Let me see. I'm gonna go in the order of I'll do the Graham Duncan, then I'll do the Mike Maples. But those are the two investors, interviews with both of them. So Invest Like the Best, interview with Graham Duncan. And there's one part in particular. This is about a 2-hour long interview, by the way, for folks that may want to go listen to this. Just prepare yourself for that. And about an hour and 45 minutes in, there's this piece where Patrick asks Graham, what's surprising to you about, like, when investors are investing at the highest levels? What's been surprising thing that you found? And the thing that he said was surprising was how important early returns are, and in particular, year one returns. The example that he gives is he says that when Cliff Asness, who we've mentioned a few times on the pod, when he was starting, they didn't mention the name of the other person. I don't know if you know who it is, but he said Cliff and somebody else that had very similar attributes, backgrounds, credibility, etc., were both starting their firms. And it seems like Cliff had an awesome first year. This other investor didn't. And we don't know the name of the other investor. And you know Cliff. When you first sent this over to me and I first saw the quote, I wasn't sure what the context of, or like the why that first year was important. And it seems to me from listening to the interview that it's because of the popularity that you can get and the influx of capital that you can get when you have a successful first year.
I think, okay, so yes, but no, I think it's more that it's really hard to beat the S&P 500 by picking stocks or using a quantitative model or whatever, right?
Yep.
And so your future years, your next 40 years compound on what happens your first year, so that the little or big outperformance you get from that first year then gets exponentially magnified by all your future returns. And so then you can claim that you continue to beat the index. So, right, in year one performance, you're shaking your head.
Not right.
Yes.
No.
Yes. Right.
If you take your returns, and let's say for your first 10 years, we're just going to use simple math, 1%, 2%, 3%, 4%, etc., up to 10%. Those are your returns. You can put those in any order and you still end up with the same number at the end.
No, that's true. That's very true. That's not what I'm saying. Although it sounds, thank you. Because let's see if I can articulate. It sounds like that's what I'm saying.
It's not what you're saying. It's what you said.
Okay. So let's say these two people, person A and person B, are on average going to return 10% each year.
Okay.
Yep. They're going to have some 5%, some 15%, whatever. Right. But person A, their first year is up 50%. And person B, their first year is up 5%. And then their performance from that point forward is basically the same.
Yep. Okay.
Person A has this huge, like you're saying, PR head start, but they also, assuming that their performance matches person B for the rest of their track record, have this huge advantage in outperformance. We talked about this with Guy Spear a couple of weeks back, right? His early performance is really, really impressive. His recent performance, not impressive, right?
That's putting it lightly.
Just is what it is.
It impressed something upon me. It impressed something upon me.
If you still go back and look at his entire track record, he's beating the index. That's largely what happened in the beginning years, and he's been able to ride that wave going forward. So I love your perspective here. And in Graham's point, actually didn't make it to that part of the podcast. So in Graham's point, I trust your judgment there. But I think there's multiple factors going on here in terms of why that first year really matters.
Yeah, I think that there probably are multiple. And I think mostly what he was talking about was the PR point, I believe. But I hear you that in the end, if your long-term performance is the same as somebody else, but you get that those first early couple of years, it can change the whole average over time.
Well, what I'm saying is the PR continues 10 years later, because 10 years later, person A is out there going, on average, we beat the index by X, and person B can't say that. And person B might not even have a fund anymore. This is really interesting because I believe it's Bill Ackman, but it could be Einhorn. Talked about when they first left their hedge fund, they went around to raise funds and they only got $3 million. And they were like, did not think that was enough money to make a dent. But then they had a really great first 3 years. They had a really great first 3 years on only $3 million worth of capital, which you can invest in things that you can't do when they're at your current size. So, and I think those tailwinds have been at their back ever since. It's a very interesting story.
Yeah, that is interesting. The capital size is important there. Something else that Graham Duncan brings up is that if someone blows up in the negative way, meaning that you implode, if someone has a fund that implodes, it is likely that will happen to them again.
Yes. I believe this wholeheartedly in my core. I never did a study on it. One of the things I'm most proud about my performance is I've never blown up. And my investing philosophy is such that I sure hope I'm never going to blow up. I think that's like critically important. And to that point, anyone that's blown up, I basically don't want to touch.
And he's saying that it can be easy for people to look at the scenario and be like, oh, bad luck as a reason for it. But, they showed me their 3-year returns and it was phenomenal. And so they just got hit by bad luck. I'll invest again. But when you look under the hood, it's probable that they likely have other attributes that are them taking on levels of risk, whether it's type of asset, concentration, whatever the facts might be. That's going to put them in the same scenario again eventually. And I actually probably think, going back to the luck component, it probably was bad luck. But what people need to see is that everyone gets hit with bad luck. It's what is your current situation when you get hit with that bad luck, and is it durable?
Yeah.
Or is it fragile?
Yeah. Are you planning for the worst case scenario?
Yeah, exactly.
I think you should.
I raised this at the poker table. Oh, I raised this at the poker table. Look at that. Look what I did with those words. But when you look at poker, we'll talk about poker tournaments in particular. And you're gonna have pocket aces, and someone's gonna have their pocket twos and hit a third two or whatever. It's gonna happen. Like, that happens at the poker table. The question is, are you in a position when that happens such that you can sustain it? Or on the opposite side, when you get hit with the good luck, because people get hit with the good luck. When you get hit with the good luck, are you in a position where you can actually take advantage of it, or no?
I mean,
both of those
if
things.
My investors at the poker table, I'm moving on, Doogles.
Don't go to douglesfund.com then. And by the way, douglesfund.com is not a URL that I own, at least. So if you do go there, don't think that's me.
Yeah, I was a little concerned.
Yeah. Maybe I should pick that up
right now.
Maybe I should pick that up. Yeah, check to see if it's available. I'm probably going to buy it. My wife already talks about how I buy too many URLs, but might as well throw this one in the mix. Yeah. All right. Can I go to the other one? Or do you have anything else on Graham Duncan?
Please do. Let's talk Mike Maples.
All right. Mike Maples. If anyone's been in the VC game for a hot minute, you've definitely heard of Mike Maples. Mike Maples he's a very well-known venture capitalist. And he came out with the term maybe like 10 or 15 years ago, thunder lizards. That's his big term. Anyway, so if you ever heard of thunder lizards, that's him. Kind of like what unicorn is to Aileen Lee. Thunder lizards.
Who's been on the show, by the way. Check out that episode.
That's right.
Thunder lizards. Doogles, I don't know if I know what thunder lizards mean.
It's like the big kahuna.
Okay.
That's what it is. I'll look up the exact definition so that you can see, because I can't remember why he called them thunder lizards. Let's see. It's giving me the actual definition of thunder lizards here, as opposed to Mike Maples.
Well, I'm just criticizing your intro here. I don't think thunder lizards is as well known as you think it is.
No, maybe not. It is in the VC sphere.
Yeah.
So, but what he says is there are a tiny number of truly exceptional companies that are wildly disruptive. Capitalist mutations. that is it. So he's talking about like the big old Godzilla dinosaur that comes through and is fire breathing everywhere. You're like, whoa, like it's huge, it's disruptive, and only a small number of companies end up hitting that. He calls them thunder lizards. All right. So he had an interview. He was on Meb Faber. I thought this was the most fascinating thing to me, because I wouldn't see Meb as somebody that, like, Meb and Mike are in different camps. But Meb has been. Go.
Sorry to interrupt. I have to just take our hat off and salute. The best thing about Meb, if you're listening, this is like, Meb is he's just a curious investor. He's not going to say this is the right way to do it. He's going to ask questions from anyone that's doing it wisely, that has a process. Like, that's what's so good about him. He'll have more diverse guests than almost any other podcast, and he doesn't even have to know the folks well. He just wants to put that content out there. I think he does a really incredible job of that.
It's pretty cool. And I thought it was so interesting because of that fact, because it's what is it like in my head for a value investor at their core who has a fund that looks at the cheapest stock markets around the world, to interview somebody who goes after companies that don't make sense at the time where he invests, because he's a very early investor.
They don't make any sense.
All right. So he from the get-go, they start talking about this very concept in the interview. And Mike he's like, I am less interested when you are an investor like him who gets in, like he invested in Lyft when it was Zimride, invested in Twitter when they were still debating whether or not they had vowels in the name.
Yep.
He passed on Airbnb, but it was at the point where it was still called Air Bed and Breakfast. Like that's how early he gets into these companies, or not in the Airbnb case. But so he said, at that point, I am less interested in margin of safety. Like that's not a concept. It's not about margin of safety.
Yeah,
I'm more interested in what's the asymmetric upside if it does work. Because what he needs is a 100x, 100 bagger in order to make his fund. And he said in a part of this interview, he's like, I don't even want, because I think what Meb came to him and said something along the lines of, yeah, if you get like a 5-10 bagger, like if you do that in the public markets, it's amazing. Like people, they want to be a part of your fund, et cetera. He goes, and you'll have those, I'm sure, but it doesn't move the needle for you. And Mike Maples says, actually, it's bad to have those.
Yeah.
He doesn't want a 5 or 10xer because he needs a 100xer. So basically you fail or you go 100x. That is that's the side of it. I think it's like so interesting. I'll name a couple other things that I thought were interesting, and feel free to hop in at any point. There's one point he talks about how the companies that he invests in, he needs them to not be differentiated, but to be radically different. This is the Thunder Lizard concept, like radically different. So it's not, he said at the moment that someone's comparing you to an incumbent product that you have, you've already lost. Like it's already, you're done. Because it's not, you're not trying to say like we're better. It has to be radically different. People have to be like, why would this ever work? So like in Lyft's case, for example, why would anyone ever get into a stranger's car? It's things like that you're going to iterate. The company will iterate on it. The Cybertruck is like an example. He's like, he thinks it's ugly, but anyway, as do I. But he's like, the thing is that what Elon Musk does, this is pre-government Elon Musk, like entrepreneur Elon Musk. But he said, what Elon Musk does is he says, live in my future or don't, but I'm going to make this. And it's such a strong and difficult opinion.
His point on the Cybertruck is really good. There's almost not a competitor. You either hate it or you don't, but you're not like buying an F-150 or you're not going Cybertruck or F-150. Right. You're good, like, I want a Cybertruck. There's nothing that compares to it. The Lyft story I loved. One, as Lyft and Uber grew, I thought it was so interesting. And there was a time where I thought, why would anyone want to own Lyft? Until I realized that you need at least a duopoly in that space, because Uber's bound to mess up here or there, and Lyft has to be there. But he said with one of the new products, they pitched the board and they were like, why wouldn't we do this? And the founders were like, well, this is actually against the law as it relates to. And the board member, who was his colleague at the time, was like, okay, well, let's get the law changed. I mean, that's not the type of investing for me, man. That like, they were like, so we're gonna have to knowingly, because this is potential death for the company. We're gonna have to knowingly disobey the law for a period of time and get such good user feedback that we can walk up to the lawmakers and say, you have to change this because people love it. It's really fun.
It's fascinating. The last thing I'll throw out is I thought this was also quite awesome. He talks about Warren Buffett, and he says, which he is not, Mike Maples and Buffett are in completely different camps. He says Warren Buffett sees reality better than anybody else. And in my game, I have to see what's possible. And that is, it's not that either of them is not doing the other in any capacity, but he's like, Warren Buffett will read the 10K and he can see that 10K better than anyone else can see the 10K. Like what's happening here? What's the underlying fundamentals of the business? What are the risks of the business, et cetera? He can see that, but that's reality. He has numbers to go off of. Like, I don't have any numbers to go off of. it's all imagination and possibility. And I think that it's a great dichotomy to paint for those two investing. I can't even really say investing styles because they're just in different camps, different size companies, everything. They're just completely different. But I thought that was a really good way to lay it out.
Agreed. This Mike Maples made his job sound fun, like incredibly stressful, incredibly turbulent, but fun. And he's clearly one of the best at it for that early stage. My question is, I don't know like his background going back 40 years, but if it was fun, if there was ever a time where he still had to kind of worry about paying the bills, because I would think it's less fun then, right? Once all your financial needs are taken care of, then it's really fun to go write seed checks.
Yeah. But I think to get into that game, financial woes is something you kind of need to not have from the beginning.
It's a great hobby for your semi-retirement, man.
Like, yeah. If somebody's sitting around, they're like, God, I can't pay rent next month. How am I going to pay the bills? Let me go become a seed investor. I would advise against that.
This is my point. Well said.
Yeah. But it is cool. And thinking about it from a mathematical standpoint, because he breaks something down at some point, he's like, let's just say raise $100 million fund and he invests in 40 companies, because Meb asked him why 40, why not 80? Yeah. And he said, it's basically because you need some level of concentration to be able to get the returns he's talking about. He said, let's say you raise $100 million. We're doing 40 companies. So $2.5 million each company. We need a company to be 100x. So for every company, I have to then say, if I put $2.5 million into this, can this become a $250 million investment? That's that's the math. And so when he's talking about seeing what's possible, that's the possibility he has to see, that is vast. Right? Like if something can't get to that level, it's not worth the first dollar, but that's massive.
Yeah. And then say, he didn't talk about this exactly, but say you get two of those that go 100x and a couple that maybe go 10x. Like you do 6x on your 100 million or so, and
it's great.
It's a pretty nice return. The funds are distributed in a tax efficient way. You raise the next one. Like, it's great.
But are the tax efficiencies for the individual about to go to the wayside? We shall see. Trump is trying to close that loophole, which has been, I think every president has tried to close this loophole for the last like 3 presidencies, and it doesn't go anywhere because Congress is like, I think those are the people that vote me in.
Those are the people that write me checks, actually, is what happens.
Yeah. I said vote me in. You said write checks. I didn't go down the bribery road, but
what are we talking about? It's kind of the same thing. Yeah. It's pay for the ads. That it's just all right. Doogles.
One thing.
Yeah, go.
I read this piece recently by Scott Galloway, and he was he was talking about the corruption. Like, I don't know if he used that word exactly, but like the corruption of the Trump administration so far. But here's how. Don't just take that. Basically, he was saying, Scott Galloway's, he's always like riding the line or over the line. What he then started talking about like Nancy Pelosi and folks like that. And he goes, here's the difference is that like Nancy Pelosi is using her corruption to make millions of dollars. If you're going to do that, if you're going to use corruption no matter what, you should do it for billions. Like Trump seems to be doing this in the right way. Like it's kind of fascinating.
Per usual, I'm running away from all politics talk on the show.
There you go.
So new in 2025, guys, we're on YouTube. So if you use the YouTube music player, you can subscribe and stream us there. Doogles already mentioned it, but all thanks for the show are skippydoogles.com. And we'll see you next week.
See ya.